Hey guys, and welcome to another video. Today we will be looking at whether the stock market will go down in the next months, and if we are in another bear market, and this recent action from the S&P 500 was in the false direction, let's say. First we will discuss if we are in a bear market right now. So for that we can look at the definition of a bear market, which means that the prices of the S&P 500 go down go down 20%, and we can see that the prices went down from $460 to $420 around that area. That's a pullback of 9%, not 20%. So we are not in a bear market. And now the question is, were we in a bull market before? So bull market means that stock prices go up 20%. So the low would be $348, and the high would be in this case $460 again. We can see that it has gone up 32%, which means we are in a bull market right now. So this still means we are in a bull market, and this could be just a pullback. It could of course go down lower, but we could be in a pullback right now. So these were the definitions. Now let's look for reasons why the market went down. So the market went mainly down due to the interest rate decision. I think it broke through some resistance right here because of that. That's because the Central Bank of the USA decided that they would they wouldn't raise interest rates, but they would keep interest rates higher for a bit. I think until 2024 or something like that. And the markets crashed for that. To be honest, I didn't really think the market would crash. I thought it would go up, so I was pretty surprised that it did crash. And my honest opinion is that I thought that they would keep interest rates higher for a bit. So I don't really know if that wasn't priced into the market when they said that. So this could be an unreasonable move which would correct in the next few weeks. But we don't know if people really priced it in. You can tell me if you priced it in, if you thought interest rates would stay higher for a bit, in the comments. So that would mean this move would be unreasonable and would probably correct in the next few weeks. Or of course it couldn't be. It could be that people didn't think it would stay that high, and now they will short the market and make it go down even further. But well, that's one reason for the market going down, and it may go up again like that. Another fundamental reason would be that the market is overpriced right now. That's true if you look at the price to earnings of the S&P 500. I think it's at 25 or 20, so above the average of the last 20 years or something like that. But yeah, here you can see it's at 24 right now. I don't know if that's up to date. But the average is around 16, and that means it's overpriced. But the question is, of course, which part of the S&P 500 is overpriced. It's mainly due to stocks like Nvidia or tech stocks, which have higher PEs of, I think Nvidia has 200 price to earnings, and other stocks like Microsoft have a 30 price to earnings, which means they are a bit expensive right now. And other stocks aren't that expensive, but they all are in the S&P 500, so I don't think that's an argument that only tech stocks are expensive. I think the S&P 500 in general is expensive, more expensive than it should be. But that's another argument for the market going down even further. Another fundamental reason. Now we can look at the chart to see if there's some support right now. Let's look at the weekly chart. and we can draw a support line right here. And in this case it would touch, it would have some support right here, and it could bounce back up from here. But it could also break out, or it could do a false breakout. So I don't really recommend trading because there are too many mistakes you could make, and I don't really think you could make money with it. So I would advise you to invest your money instead. You could dollar cost average into the S&P 500, like I said before. I don't recommend you to invest really large amounts of your portfolio all at once right now because it's overpriced. You could have done that maybe at the COVID crash or something like that, but not right now. Not even at the lowest point of 348, I think, would be a good decision to invest big amounts. So you could dollar cost average in, or you could invest in single stocks, or you could choose an index which isn't that overpriced right now, like the Hang Seng index, which is the Chinese stock index, even though you have to be careful because it's indices from countries like India and other countries like that, not developed countries, didn't outperform the S&P 500 over the long term. So you should be careful with that. You could also pick the DAX index, the German index, which is also rather fairly priced, but keep in mind that German stocks don't rise that much, so don't expect 10% per year to you could make it's more like 5% per year, so don't invest too much into that. You could of course also pick a international ETF like the FTSE All World or the MSCI World. I don't know how overpriced they are right now. You could look at the PE ratio of both of them, and you could of course choose single stocks to invest in like PayPal or Alibaba, and you would need to do a bit of research on how to invest into stocks. I've also done videos about at which prices you should buy both stocks. Both are rather fairly priced right now, so you can make 15% per year if you think my numbers are reasonable. But you can you can watch these videos and see. And that's it for today. If you liked the video, give it a like, and bye.